Not a day goes by when I'm not asked the question, can I get a first-time home buyer loan or a no money down or roll in my closing costs? This is Ron Wojciechowski for Real Estate in a Nutshell. And when you're asked that question, how you respond matters. There's only two mortgage availabilities with no down payment. There's VA, so if you're a veteran and you've got your DD-214 and your eligibility certificate, you're likely to qualify for no money down with a VA loan. And with that one, you can actually get 4% of a seller credit at closing to help pay for the closing costs. So if you spend $250 on a property, 4% of this 10 grand, as long as you write it up as a $250,000 sale with a credit to the buyer at closing from the seller of 10 grand, that's your 4%. You're pretty good. That's helpful. USDA loan works a little bit differently, but it also can be 100% financing. There are some income restrictions and qualifications, I guess, however you want to say that, where there's the borrower's income, which you have to count on USDA, and there's also the household income. So for instance, if let's say there was a married couple with a working age child, then if one of the two parents, I guess, was borrowing the money, that income would go towards qualifying for the loan. But there's also a household income. So let's suppose that both spouses and the teenage child was working. All those incomes were counted. You would have to fit within a certain limit as far as household income to qualify for a USDA loan with no money down. And that is the one loan where you can actually roll in closing costs. I'm not aware of anything else that you can roll in. So if you bought it $100,000, you may be able to finance up to 104. I think it's 4% total, which would help with your closing costs. So no money down, up to $4,000 in closing costs, I believe is the number. We can check the guidelines. And that's the only way that I'm aware of to roll in closing costs. Everything else is a seller credit. You pay a certain price, you get a credit back. So that's your low down payment and your no down payment. FHA, 3.5% down. And there's also a conventional option, has a lot of different names. It's typically a portfolio loan with just 3% down, 97% financing. Back in the day, it was called things like My Community Mortgage and whatnot. With 3% down, absolutely. There's a way you need a higher credit score for that. Has a different mortgage insurance on it. FHA, again, 3.5%. And you can get anywhere from 3 to 6% back in closing costs to help you make that purchase. All pretty good options. Beyond that, 5% down for conventional is about the only other way, 5% or below, that I'm really aware of right now. So if you are thinking of financing and you're looking for no money down or low down payment or rolling in closing costs, there you have it. There's several examples of loans that you can be speaking with your mortgage professionals about. And if you're talking about rolling in closing costs, unless it's a USDA, you are pretty much limited to having a purchase price and then having a seller credit somewhere within the addendums or in the language of the contract. That's just how you do it. So low down, no down, and rolling in closing costs, let's just check that box. If you got questions about this, message me below, and definitely hit the subscribe button so I can help you with more tips like this. This is Ron Wojciechowski for Real Estate in a Nutshell.